Hello everyone, we are going to present about motor insurance. Motor insurance, which is known as an automotive insurance, it is a private or commercial insurance policy. It can be also known as auto insurance. It is an agreement where the insurer expects the risk of any damage or losses by the operator of a car may incur as a result of an accident, as it is a financial protection against the risk of involving in an accident and having to pay a lot of money over the physical damage. The vehicle's damage and part theft or theft of the vehicle is a financial loss, and motor insurance does provide risk protection in order to overcome liabilities, including accident related financial losses. The purpose of the motor insurance is to provide liability insurance protection in case you cause damage to other people's property or deaths caused to other people, which is known as third party.
There are three types of insurance available in Malaysia, which are third party, and theft, and comprehensive cover. Each of the insurance are providing different purpose for the car owner. Based on the comparison coverage, the Aaron's private commercial car and AIG private commercial car are providing the same insurance coverage, which is third party, and theft, and comprehensive coverage. The only difference is the extended benefit based on their own preference provided by both companies, such as windscreen, flood, and so on. If we involve in an accident, the car is damaged, we can choose to pay the maintenance fee by ourselves or claim insurance. If we don't claim the insurance for the according year, we are being rewarded no claim discount rate. According to a table, private car have higher MCD rate compared to commercial car. Yes, when we do claim the insurance, there is some requirement that we must be fulfilled. For example, Eric is having a comprehensive coverage insurance, but it is not including some extreme coverage, which is when Eric's car is broken by a tornado.
Hello. Moving on to the third-party property damage claim. A third-party damage claim is usually made by the insurance provider of the driver to the other party immediately after the accident, and separately from any claim for personal injuries due to the accident. What's covered by a third-party car insurance is body injuries to a passenger or a person in the other car, damages to another person's car, and what's not covered by the third-party car insurance is medical expenses for your own injuries, your car's damages in the accident you caused, if your car is stolen, damaged, or destroyed by fire. Motor insurance detariffication. Motor insurance detariffication involves eliminating the structure of the tariff that will require insurance companies to charge premiums to meet their customers' risk profiles. And the pricing factors for the car insurance premium: gender, driver's age, occupation, vehicle model, usage of car, and claims experience. Moving on to Sharia compliant plan or takaful insurance. Takaful insurance uses law consistent with Sharia and Islamic principles to form its policies. Participants contribute to a common interest by making a donation rather than paying a fee. How no claim bonus work for Sharia compliant? It rewards the drivers who have no claim during the year by dividing the revenue surplus equally between the insurer and the insured. Sharia compliant differ from the traditional insurance by loss of use and profit sharing.
What are the factors that will affect the pricing policy for car insurance? Basically, all the factors listed here affect the risk of driver getting involved in accidents. For example, drivers that opt for comprehensive car insurance live in urban with bad driving record and high-end car tend to get higher charges or premium. Moving on, I'm going to explain the relation to current practice in car insurance industry in Malaysia. So, what are the exciting new trends right now? E-hailing insurance. I believe everyone is familiar with names like Grab, MyCar, Uber, and etc. right? Last year, our former transport minister announced that vehicle used for e-hailing services must have e-hailing insurance in order to get on the road to work. But what is e-hailing insurance? It is an add-on coverage to existing car insurance policy with the aim to help drivers to cover loss or damage to their vehicle, liability to passenger, and third party at affordable pricing from 1 to 2 ringgit daily. telematic motor insurance. Telematics stands for telecommunication and informatics, and this insurance requires a tracking device to be installed in your car to monitor your driving behavior, speed pattern, distance travel, and driving environment to assess the level of protection needed by the driver. Policyholders are able to enjoy premium discount for their safe driving behavior and get assistance on their safety and security via their mobile apps provided. Moving on to the outlook of motor insurance in Malaysia market, due to the ongoing pandemic situation, some insurance companies are predicting a gloomy outlook as they aren't able to connect with their customer, while some on the other hand are expecting further growth by taking advantage of technology.